Hello guys, my name is Patel. I'm a student of MS in accounting. Welcome to my video blog on international financial reporting standards, what they are, how they developed, and what they stand today. Let's jump in. IFRS stands for International Financial Reporting Standards. It's basically a global accounting language used in more than 140 countries. Created and maintained by the International Accounting Standard Boards. IFRS helps companies prepare financial statements that are understandable, comparable, consistent, and transparent. IFRS makes it easier for investors and companies worldwide to communicate financial without needing 140 different accounting translators. Now let's go on a quick time traveler. In 1973, the International Accounting Standards Committee was formed. They created the first standards called IAS, International Accounting Standards. IAS standards evolved between 1973 to 2001, but the world wants something more unified. In 2001, the IASB replaced the IAS. New standards are now called IFRS. In 2005, a huge global shift, the European Union mandates IFRS for all publicly traded companies. This makes IFRS the default language of global markets. In today's time, most countries use IFRS. IFRS exists to solve three global accounting problems. First one is everyone used to follow different rules. This made comparing financial statements across countries almost impossible. Second one is companies had to create multiple reporting formats. A multinational might need one set for their home country and one set for investors abroad. Another for regulators talk about extra homework. The third one is investors needed clarity. Investors could not trust or compare numbers globally. IFRS fixed this issue by making accounting like international traffic rules. Green means go, red means stop, and IFRS means the number financially match. Here is why IFRS matters in 2025 and beyond. The first one is global comparability. You can compare Apple in the US and Samsung in Korea or Nestle in Switzerland with one language. Supports global investments. Investors don't need to decode financials across countries. Third one is principles-based system. IFRS focuses on concept, not the thousands of pages of rules. More transparency. Companies must disclose more information useful for investors, regulators, and auditors, and reduce costs for multinationals. They no longer prepare multiple sets of statements. Let's address the elephant in the accounting room. Why is not the United States using IFRS? Because the United States loves its rules. IFRS is principle-based and the GAAP is rule-based. The key difference between GAAP and IFRS. First one is about inventory. IFRS is not allowed to use LIFO method. On the other hand, GAAP is allowed to use LIFO method. Second one is for asset revaluation. IFRS allows upward revaluation for asset. On the other hand, GAAP does not allow any kind of asset revaluation. Development costs. IFRS sometimes capitalize their development costs, and the other hand, GAAP usually expense their development costs. On the fourth one, both use similar models. It's lease accounting, but the United States version is well more rules. IFRS is not slowing down, it's transforming. Recent major standards IFRS 9, the first one, financial instruments. IFRS 9 specifies the principles for the classification, measurement, and impairment of financial instruments using an expected credit loss model. The second one is IFRS 15, revenue from contracts. IFRS 15 provides a comprehensive framework for recognizing revenue from contracts with customers based on five-step model that ensure revenue is recognized when control of goods or service is transferred. The third one is IFRS 16 leases. IFRS 16 requires leases to recognize most leases on their balance sheets as right-of-use assets and corresponding lease liabilities, eliminating the previous distinction between operating and financial leases. The fourth one and last one is IFRS 17, insurance contracts. IFRS 17 establishes principles for the recognition, measurement, presentation, and disclosure of insurance contracts, aiming to increase transparency and consistency across the insurance industry. Sustainability reporting ISSB, the newest development. The first one is IFRS S1 Sustainability General Requirements. The purpose of IFRS S1 is establishes the foundational requirements for a complete set of sustainability-related financial disclosures. Focus of IFRS S1 is requires companies to disclose information on significant sustainability related risks and opportunities that could affect enterprise value. The second one is IFRS S2, climate disclosures. A purpose of IFRS S2 provides specific mandatory disclosures for climate and related risks and opportunities. A focus of IFRS S2 covers physical and transition risk, greenhouse gas emissions, climate-related internal carbon prices, and capital deployment related to climate. Of course, IFRS is not perfect. There are lots of challenges of IFRS. The first one is complexity and interpretation. Principles-based nature. IFRS provides broad principles requiring significant judgment and interpretation leading to inconsistency. Ambiguity. Lack of clear guidance from the ISB can cause confusion in applying standards. Fair value accounting. Using fair value is complex and can feel inconsistent. The second one is cost and resources. High cost, significant expenses for training consultants and IT system upgrades, especially for SMEs. Resources intensive, demands heavy resources and time. The third one is implementation and systems. System changes requires major overhauls of accounting software and processes to handle granular data. Data management challenges in data preparation, cleansing, and consolidation from diverse systems. The fourth one and last one is professional and cultural hurdles. Lack of expertise, insufficient training, and technical knowledge among professionals, cultural difference, conflict between IFRS principles and culturally rooted rule-based local practices, management and support. Weak management backing the and cultural hierarchies can hinder effective adoption, say Aston University. IFRS is not just accounting, it's the world financial handshake, a common language that makes business fairer, clearer, and more connected. If you are interested in accounting, finance, investing, or global businesses, IFRS is powerful foundation to understand. Thanks for watching my video blog. I hope this helped you understand how IFRS developed, what it is today, and why it matters. Thank you.